السلام عليكم ورحمة الله وبركاته. Managerial Accounting Chapter 5 Cost Value Profit Analysis تكلفة الربحية. Cost Value Profit Income Statement. We will prepare Cost Value Profit Income Statement. As you know, you studied income statement in financial accounting and in intermediate accounting, but this cost value and profit income statement for internal use, and this income cost value and profit income statement we classifies costs and expenses as fixed or variable only. Two classes: fixed and variable. In cost value profit income statement, we classify costs and expenses only for fixed or variable cost. Also, reports contribution margin in the body of the statement. In this statement, we show contribution margin, which amount of revenue remaining after deducting variable cost. As you see, all costs classify for fixed or variable. When we deduct from revenue variable cost, the remaining is called contribution margin. Amount of revenue remaining after deducting variable cost reports the same net income as a traditional income statement. A traditional income statement, the statement we prepare when we prepare financial statements. We reach here the same result, the same net income. Now, cost value profit income statement for V Electronics company produce cell phones. Relevant data for the cell phones sold by this company in June 2020 are as follows. Relevant data. This is very important. Item in managerial accounting. Relevant data for the decision we make. We consider only relevant information, relevant data. Here's the data assumed selling and cost data for FIDO as the following. Unit selling price for cell phone $500, unit variable cost $300. As you see here, this variable cost includes variable manufacturing cost, variable selling and administrative expense. All the variable cost from manufacturing and from selling and administrative. Total monthly fixed cost 200,000. Also, fixed cost include fixed manufacturing cost, fixed selling and administrative expenses. Again, as you see in cost value and profit, we said classifies costs and expenses only for fixed and variable. All the fixed together and all variable together. So all unit variable cost 300 from manufacturing, from selling and administrative. All fixed 200,000 from manufacturing, from selling, from administrative. Now, the cost value of profit income statement will be as you see for the month ended June 30, 2020. Sales revenue, as you see, selling price 500, unit variable cost 300. Here you must be given the units we sold 1,600. In the exercise, there is another relevant data, the number of units we sell. 1,600 times 500 less variable cost for 1,600 units times 300. So we got contribution margin 320,000 less fixed cost, or the fixed cost 200,000, net income 120,000. Here's cost value profit income statement. It's all the variable costs together, all fixed costs together, and you see a new item, contribution margin. Sorry, unit contribution margin هامش المساهمة للوحدة، مساهمة الوحدة unit contribution margin, the difference between unit selling price and unit variable cost equal unit contribution margin. مساهمة الوحدة سعر البيع ناقص التكلفة المتغيرة للوحدة. Unit contribution margin is available. This contribution margin is available to cover fixed cost first and to contribute to income. From this exercise, unit contribution margin, the difference between selling price per unit and the variable cost per unit. 500 less 300 equal 200. Unit contribution margin 200. This contribution margin first to cover the fixed cost, then to generate net income. Again, unit contribution margin 200 to first from this contribution margin we cover fixed cost, then we begin to generate net income. Formula for unit contribution margin and the computation for a video are. As you see, unit selling price less unit variable cost equal unit contribution margin. $500 less 300 equal $200. Again, unit contribution margin to cover fixed cost and contribute to income. Now, F cost value of profit income statement, assuming a zero net income. If we sold only 1,000 units, the sales 500,000 less variable cost 1,000 unit times 300, contribution margin 200,000, fixed cost 200,000, net income zero. Per unit is fixed as the same for unit price 500 and the variable cost 300, contribution margin per unit 200. As you see, assuming a zero net income, which means we need value of sales to cover only fixed cost. As you know, if the contribution margin per unit 200, we need 1000 units. We need 1000 units to cover the fixed cost. 1000 units times 200, 200,000. So cost, value, and profit income statement, assuming a zero net income, when we sales only 1000 units, we realize zero net income. This is called break-even point. نقطة التعادل break-even point. Now assume that I've sold one more cell for a total of 1001 cell phone. As you see, break-even point when we sell 1000 units, but now we assume we will sell another 1 unit. We will sell 1001 unit and make cost, value, and profit income statement. As you see, net income will increase by the contribution margin for the 1 unit, for the additional 1 unit. So cost, value, profit income statement show net income 200, from where it's the contribution margin for the last unit we sold. Again, this means, as we said earlier, here's the point. Cost, the fixed and variable contribution margin. Contribution margin amount of revenue remaining after deducting cost, variable cost, reports same net income in the additional income statement. As you see, contribution margin is available to cover fixed costs and to contribute to income. We said first we cover fixed costs. When we sold 1000 units, we reached the break-even point. After then, the additional sales will contribute to income. So the last unit when we sold additional 1, its contribution margin reflect in net income. Now, contribution margin ratio. We can show contribution margin as a ratio. Shows the percentage of each sales dollar available to apply towards fixed costs and profits. A formula for contribution margin ratio and the computation for a video are as you see: unit contribution margin divided by unit selling price contribution margin ratio. Unit contribution margin 200 divided by selling price 500 equal 40% contribution margin ratio. So we can show contribution margin as a number, unit contribution margin as dollar amount 200, or we can express unit contribution margin as percentage from the selling price 40%. The same thing, contribution margin $200 or contribution margin ratio 40%. As you see here, contribution cost, value, and profit income statement. This for sales 1001. As you see, this figure is not correct. It's 1001 unit. And here's variable cost 1001. We need to change this data for percentage of sales. If the sales 100%, the variable cost, when we divide variable cost by sales, equals 60%. Remaining is 40% is contribution margin, or if we divided contribution margin by the sales, 40%. As you see, this is the correct thing here. 1001. Also, if we compute per unit as percentage from this, if we calculate the percentage, here's 100% and variable 60%, contribution margin 40%. As you see, this contribution margin ratio 40%, percent of sales 100%, 60%, 40%. As you see, this figure will be 1001, or here's 1001. Some of videos current sales are 500,000, and it wants to know the effect of 100,000 200 units increase in sales. Now this the current situation, that's the sales 500,000, variable cost 60%, 300,000, contribution margin 200,000, fixed cost 200,000, net income 0 per unit, percentage of the sales. These data, current situation. In managerial accounting, to take decision, we compare the current situation with alternative B or C and so on. So here's the current situation. We on break even, which net income 0. Now if we increase the sales $100,000 or 200 units, the same 200 units times 500, $100,000 increase in sales. What's the effect on net income? With 100,000 increase in sales 600,000, variable cost will be 60% from 600,000, 360,000. The contribution margin will be 240,000 less fixed cost 200,000, net income 40,000. As you see in current situation, when we realize sales 500,000, we on break even. Break even, net income 0. An increase in sales after this value level, after this sales level, will contribute directly in net income. As you see, contribution margin per unit, we calculate below 200. So when we add or increase sales to 200 units times 200 contribution margin per unit will be net income 40,000. We can calculate 40,000 here in another way. As you see, contribution margin per unit 200 times the increase after break-even point 200, so the net income will be 40,000. Now, contribution margin, multiple choice is revenue remaining after deducting variable costs, correct? May be expressed as contribution margin per unit, also correct. Is selling price this cost of goods sold? No. So the correct answer D, both A and B is correct. So the correct answer is D. Now, industries produces and sells a cell phone operated thermostat. Information regarding the cost and sales of thermostats during September 2020 are provided below. Unit selling price of thermostat 85, unit variable cost 32, totally monthly fixed cost 190,000, units sold 4,000. Prepare C cost value and profit income statement for A industries for the month of September. Provide per unit value and total values. You must solve this exercise alone. It's very easy. Here's the standard cost value and profit income statement. We begin with sales for total and per unit. As you see, sales will be 4,000 units times 85. Variable cost will be 4,000 times 32. Then we calculate contribution margin as a total and per unit. Per unit will be 85 less 32 equal $53. Then from contribution margin we deduct total monthly fixed cost 190,000. We reach net income. The break-even analysis will be in the next recording. Wassalamu alaikum wa rahmatullahi wa barakatuh.